What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Nvidia Corporation, ticker symbol NVDA. This company just reported their Q1 earnings, and we are going to get into them. We'll take a look at the numbers. We'll take a look at the revenue, the profit. We'll take a look at the revenue trends as well. Take a look how gaming, data center, all their key business models have kind of been trending, not only year over year, but they also give you kind of a quarterly revenue trend here with Nvidia as well. We'll also go over to the stock chart as well, see how this one is reacting to the news of the Q1 results. And also we got Q2 guidance as well, at least on the revenue side. We'll talk about that as well. And now obviously we've got to talk about this 4-to-1 stock split. Nvidia announced on May 21st, they're going to do a 4-to-1 stock split sometime after June 3rd. And so we'll talk about, should you buy before or after, or should you buy Nvidia shares at all? We'll talk about that as well. Now let's jump over to the Q1 numbers. They came in at $5.66 billion. That is 83% growth year over year. They beat by $250 million. Now, more importantly, they gave us guidance for the second quarter. So this upcoming quarter, they're expecting revenue to be $6.3 billion plus or minus 2%. The street was expecting $5.48 billion. I would actually probably expect closer to $6.5 billion of revenue. Companies tend to want to sandbag these things, kind of come under. So when they do these press releases, they can say, hey, our EPS beat by this and we beat on revenue. It just looks good for the streets, look good for the computer algorithms, those types of things. So I'd actually expect them to come over $6.3 billion on the following quarter. Now, before we jump into the Q1 numbers and talk a little bit more about Q2 as well and the stock chart, Nvidia is having a 4-to-1 stock split. They announced this a week or so ago, and now we'll get a vote on it on June 3rd. We should get some clarity on when the actual split date happens. So some of you might be stumbling upon this video and wondering, should you buy Nvidia shares before or after the stock split? And for most of you watching this, you might have had Apple last year, Tesla split last year, a couple other stocks, major stocks had splits last year. You realize that it literally doesn't matter one bit to the value of your portfolio the day before or the day after a stock split. Because what I want to do is bring up a piece of pizza here. You might wonder, am I hungry? Yeah, it's close to lunchtime here out in California. But look, here's a pizza. Would it matter if we ate this whole pizza all at once? No, it wouldn't matter. It'd be one piece of pizza, right? One whole pizza. What if we slice this thing in half and I ate one half and then I ate the second half? I'd still be eating one pizza. What if I cut this into quarters? I'd still be eating one pizza. And so what I want you to think about when you are thinking about stock splits is what happens during a stock split is Nvidia is doing a 4-to-1 stock split. So if you have one share of Nvidia right now, that is worth $627. After the split, you will have 4 shares. Now, they will not, I repeat, not each be worth $427. They will be $427 divided by 4 because we are splitting this. Think of $627 like this slice of pizza. It is one pizza, one stock price. If we divide this into 4, yes, we are eating less pizza, but overall we have this one stock price. So you will have more shares, but the value of those shares will be the same in relation to where the stock price was before the split. So it literally doesn't matter. Now, from a retail investor, from an excitement perspective, does it matter a little bit? Sure. If Nvidia was in the Dow, where that's a price-weighted index, would it matter a little bit? That's why Apple had to split. Yeah, maybe a little bit, but Nvidia is not a part of the Dow. It's not having to do a split for those reasons. Now, can the price drive up based on these news? Because you have, I wouldn't say maybe less sophisticated investors is probably a good way to put it. They buy it based on the fact that it's going to split, and that's fine. That will drive the price up. But in my opinion, a split doesn't make a stock a buy. What makes a stock a buy is the fundamentals, the valuation. So let's talk about that. That is the most important thing when you want to analyze buying or selling a stock of any size, any company. Now, first thing I want to do is just from a price to sales. I got price to sales up. These companies all manipulate their GAAP earnings and things like that however they want, but they can't manipulate sales. A sales at Nvidia is the same as a dollar coming in through AMD and Intel and TSM, Taiwan's semiconductor manufacturer, or something like that. So I've got them all here. Nvidia's in orange, AMD's in blue, Intel's purple, TSM is kind of green. Now, what I want to show you is from a price to sales basis, Nvidia is always trading at a premium to these. Okay, they're trading at 23 times sales. AMD's trading at 8 times sales. Intel 3. TSM's trading at 11. So they are trading at a premium to its peers as well. That is just something that you want to keep in mind. Now, why is Nvidia trading at a premium to its peers? Part of it is just you have this explosive growth. You also have growth in areas where investors really see even more growth going forward. So you have this gaming. So these are the CPUs, graphic cards, things like that Nvidia is making for these gaming computers. Now, I would argue that these gaming computers, not all of them are used for gaming. I think you've got some crypto mining happening on a lot of gaming computers these days, especially like kind of at-home guy. But you also have obviously explosion of gaming as well, PC gaming in particular. So we're seeing just explosive revenue trends over the last year or so. This thing went from $1.3 billion last year up to $2.7 billion. Now, data center has grown tremendously. This has been a huge area of growth for Nvidia. We're seeing that growth starting to flatten out a little bit, okay? Last year, we're sitting at $1.1 billion. We're all the way up to $2 billion. But you see, for the last 3 quarters, we've kind of been basically a rounding error right at that $2 billion. So you would like to see this data center not necessarily accelerate to where we're having this 100% growth, but you would like to see this continue to go up. You certainly wouldn't want to see it going down, so we'll see what happens there. But this gaming continues to drive. They keep bolting on more and more revenue to this gaming side. As long as gaming, and in my opinion also crypto mining, okay, those both use the same types of equipment that Nvidia manufactures. As long as crypto mining and PC gaming remain hot, then I think this company is in the right trend and can continue to move forward. Now, let's look at the I tell you what, we're just going to jump into the revenues. I didn't really like that spreadsheet that they gave. We're going to take a look at it from this perspective. So we've got our revenue up here that came in at that $5.66 billion like we talked about in the press release. Last year, we were sitting right at $3 billion. That's another reason why this company kind of trades at a premium to its peers, although AMD's growing really fast too. You know, one of the reasons is because they're just growing this revenue huge. I mean, that's $2.6 billion more on that top line. Now, the cost of revenue came in really nice too, came in at $2 billion. This business, they're just running on all cylinders. That gives us nice gross profit down here, $3.6 billion. So on $5.6 billion worth of revenue, we cleared $3.6 billion of that to the gross revenue. Last year, we're sitting right at $2 billion. Now, we've got other operating expenses here, research development, selling, general, and administrative. That came in at a total of $1.6 billion, $1.67 billion. That's about 600 million, about 650 million more than where we were the year before. That gives us an income from operations really close to $2 billion. So on $5.6 billion worth of revenue, they're clearing nearly $2 billion. This is income from operations. This is not gross profit. This is factoring in all our expenses in terms of operating the business. Man, they're clearing a ton of money. This is also why when you look at the stock chart on this, you look at the valuation, this thing has just been going higher and higher and higher because this is a wonderful thing for you, the investor, okay? Having strong revenue growth, having very high margins, but also clearing a ton of that to the income side of the business as well. Now, from a net income perspective, after you factor in some income taxes and things like that, all things look very good to me. Now, from a balance sheet perspective, you assume this looks pretty good, and you would be assuming correctly as well. We've got on the right-hand column is the beginning of the year, or really the end of January, and the left-hand column is the end of the most recent quarter here. We've got cash and cash equivalents sitting at $12.6 billion, got another $3 billion in receivables, sitting on $1.9 billion worth of inventory. All in all, total current assets sitting at about $18 billion. Our total assets sitting at about $31 billion. That's up slightly from the previous period. Now, they got a little bit of long-term debt, but nothing that I would be at all concerned about. You got $5.9 billion worth of debt, and they got about $1 billion sitting on the short-term debt side. All things being considered, they could wipe that out with their cash balance and still have plenty of money left over. So that is looking very strong as well. Now, from a cash flow perspective, could it get any better? Yeah, actually it could. You can pull down this net income number of $1.9 billion. Man, that's so nice. Now you got a cash flows from our operating activities right here. We pull down $1.8 billion. So our net income was $1.9 billion. We netted out, or cash flows from operations was $1.8 billion. It was $900 million. So we doubled our cash flow from our operations. That's phenomenal as well. We've got some dividends that we're paying down here. It's just overall, this is just an extraordinary company. Okay. They are printing money to the bottom line on a net income basis, cash flow basis, income from operation perspective. This statement of operations is about as clean as it gets, okay? And not only that, you've got this explosive revenue growth as well. Although it's starting, I wouldn't say it's explosive anymore. We've got nice, strong revenue growth as well, but I think their explosive days are over. We'll see if that stalls out the stock chart. And I tell you what, we have seen kind of a stalling out in this name, okay, really since of August of last year. This is not unlike a lot of tech names that we analyze here on the channel. They tend to go on these monster moves. I mean, at the end of March, this was under a $200 stock, and it rallied really hard up to $500, and then it's basically stalled out, kind of waved out here. Now we're sitting way up here at about $624 per share, but we have not been able to get above $648 per share. Now, again, you're going to have a 4-to-1 split, so you're going to have to divide this number in 4, but all in all, the stock chart will look the same. We'll just have to adjust our numbers to that. And it could be that when you reduce this stock price by 3/4, that it could introduce more investors into a stock like this. The fact that it's $600, if you don't have access to fractional shares, or you don't understand how those work, or whatever it might be, well, it's kind of hard to add to a position when it's $600, especially when you're talking about an IRA account or something like that, where you're limited on the amount of deposits that you have. All in all, from a technical perspective, I still think we're kind of waving out here. Okay, I'd like to see us break above 647. You break above 647 on momentum. Look, the sky's the limit. $700, $750 could be in play on this one. Now you get rejected here at 645. Your next logical spot where you could stop is right about 600. We'll call it 580 to 600. There's actually 2 levels here at 580 to 600. You want to pick up a share right in here? Wouldn't blame you. Now, further down, you got a level down here at 540. That would be an area I'd be interested in. Further down, right at $500 on a dot, would be an interesting spot as well. After the split, that would just be over 100 and change on this one. So about $125 per share is where I'd look after the split on that one. So that's Nvidia. This is a stock I own. This is a stock I really like. Over the last year, it's up 73%. Year to date, up 19%. This is a stock you buy on any type of pullback, any type of weakness, any type of commentary out there that says, hey, look, maybe their business units are slowing down. Do they have competition? Yes, to a certain degree. They still are. They still blow their competition away in what they play in. Okay, their products are superior. That is why consumers are willing to pay a premium for them. That's also why people are willing to pay up for it, especially in the gaming, the crypto mining, and we're now seeing in the data center as well. That was NVIDIA. Hopefully you guys enjoyed this video. We'll be back again with more very soon. Good luck with your investments.